Hi friends, welcome to Adda 24/7. We are in the Sankalpa series for BFM, and in this series we are covering important theory, objective questions and numericals as well. So follow the series till the end. Okay. So let's start with the series. Okay. First, here today we'll be dealing with the theory part as such. This foreign exchange risk, various risks we'll be dealing in, and that also theory part. So meaning of the foreign exchange. So what do you mean by foreign exchange risk actually? What do you mean by this? So this foreign exchange risk refers to the losses that an international financial transaction may incur due to the currency fluctuations. Now what do you mean by this? Understand this concept very clearly. Currency fluctuations means currency fluctuations happens when it happens due to the change in the rate of the two currencies. Change in the rate means what? If there are any changes in the government policies of any country or if there is an inflation rise, then the currency changes do happen. Okay? Keep it very simple. Suppose if any country's inflation rate rises, inflation, okay? Understand this. If inflation rate rises, okay, what do you mean by this? The inflation is rising means RBI will have or central bank will have to do something. So what will the central bank do? Central bank will try to control this inflation rate. And whenever any inflation rate rises, the currency goes down. Currency always falls. Okay, it falls. So to counter this, what does the RBI do? RBI controls this inflation so that the current currency again rises. Okay, so foreign exchange risk means what? The losses that international financial transaction may incur due to currency fluctuations. Means if my dollar rate goes from dollar, let's say, if I'm having $1 equals to 80, okay, I brought it at 80 buy, okay, and tomorrow this dollar rate goes to 70, then I'll have to sell it at 70. Means I'm having right now notional loss of 10 rupees. So this is known as losses may incur due to currency fluctuations. Okay. Foreign exchange risk can also affect investors who trade in international markets, businesses engaged in the import, export of products or services to the multiple countries. So definitely, see here, anyone this is just a common sense, isn't it? Anyone who is dealing in foreign countries or foreign exchange will definitely find all these things, all these fluctuations, right? Who trade in for international markets, businesses engaged in import export of products and services to the multiple countries, isn't it? So suppose if I am selling my goods to, let's say, USA, and how it will affect, let me show you that also. Suppose if I am selling my goods to USA, let's say, okay, I made a contract with them for, let's say, $100. Okay, $100. I made a contract. I'll be selling you this good at $100. Tomorrow, if the dollar rate is, let's say it is 80 now, rupees 80. So now if the dollar rate goes from 80 to, let's say, rupees 60, what will happen? The person in USA will give me $100 only because I'll be selling the goods. That guy will be giving me $100. But earlier for those $100, I was getting 80 rupees in India. Now I'm getting 60 rupees. So this means what? See here, I'm engaged in the business where I'm doing the exports to multiple countries. This can be USA, this can be UK, anyone. Okay. So who trade in international markets and businesses engaged in the import export of products or services to the multiple countries. Okay. What is exchange risk? It is the most common and obvious risk in foreign exchange dealing operations arise mainly on account of fluctuations in the exchange rates and or when the mismatches occurs in asset and liabilities and receivables or payables. So this definition is very important. Exchange risk definition comes in exam on account of fluctuations in the exchange rate. Okay, one is fluctuations. Second is and or when the mismatches in the assets or liabilities occur. What do you mean by assets and liabilities? Here, the meaning over here means asset means what? Suppose if I am having a long position, long means what? Suppose if I brought the dollars, okay, I brought the dollars and kept it with me. So that is known as a long position. So that becomes my asset. Okay, if I have shorted the dollars, means I have sold it now, and next whenever the rate goes down, I'll buy it. So that is known as liability. So when there is a mismatch between the long and the short positions, I'll definitely get the problem in this exchange risk. Okay. And receivables payable, same thing. See, receivable payable means whatever I have to receive versus whatever I have to give back. Okay. Settlement risk. Settlement risk is the risk of the failure of the counterparty during the course of settlement due to the time zone differences between the two currencies to be exchanged. Now, what do you mean by this? See here, failure of the counterparty during the course of settlement. Counterparty is not paying you because of the time zone difference. Mainly remember, the settlement risk occurs due to the time zone difference. Time zone means what? Suppose if in right now we are in India, right, Bharat. So right now we are in Bharat. So here we are having the day. So in USA right now it is night. So this is known as time zone difference. Suppose if today the date with me is, let's say what, 5th September, right? Or 6th September. Suppose the date is 6th September. So in USA, this 6th September will be whenever we are sleeping at night. So there is a difference of around 11 to 12 hours. Okay. So this is known as a settlement risk. So risk in failure of the counterparty due to the course of settlement due to the time zone differences between the two currencies to be exchanged. Okay. That is where one party performs its parts of contract by delivering the currency to be delivered by it, but the counterparty fails before delivering the currency to be delivered by it in a different time zone. Means false. It is false. Fails before delivering. Fails before delivering means it is unable to pay because of this time zone difference. So remember, only time zone difference is the only reason for settlement risk. Otherwise, if the actual counterparty fails, that is known as a counterparty risk. That is a credit risk. Okay. Now let me ask you. Suppose if I am doing a transaction within India only. Okay. Will there be a settlement risk? If I am doing the transaction within India, will there be a settlement risk? Almost nil, because time zone difference is nil over here. Okay. So that's why this is a simple example. Correct. Country risk. It is a risk of the counterparty situated in different country unable to perform its part of the contractual obligations despite its willingness to do so due to local government regulations or political or economic instability in that country. What do I mean by this? See this. Suppose if you have sold some goods to somebody in Afghanistan. Okay. So what happens? The Taliban takes over in Afghanistan, and then what happens? Taliban, let's say, it says that no more currency should go out from my country. No dollar should go out from my country. So what do you mean by this? It means government regulations. Here, the government over there is Taliban at that time. So government regulations or political or economic instability, even this can be the answer. Now, political and economic instability means what? Let's look at this Pakistan. All our neighbors are of the same range now. Pakistan. Check Sri Lanka. Okay, same Sri Lanka, same logic. Okay. Then you have the other one is this Nepal also. Nepal is also not in the good shape. Okay, Nepal. So Pakistan, Sri Lanka, Nepal, even Bangladesh. Bangladesh is okay type. That's okay because they are growing right now. As compared to all these three countries, Bangladesh is growing a lot. So country risk means what? The person in that country, your counterparty, is not able to give you the money. Why? Because of the local regulations. The government over there has put the regulation, something like this. Okay. Everyone download Adda 24/7 app on your mobile. In this app, you'll be getting the premium study material plus live classes, ebooks, tests, whatever we need for clearing JIB and CIB, we get it over here. So that's why download it right now. Okay. Now let's come to the objective questions. Which of these statements is false? Now we want false one. Huh? Remember this. We want a false, not a true one. False. Okay. The forward exchange rate is a good predictor of future spot exchange rate. Future spot exchange rate. Okay. So forward exchange rate is a good predictor of future spot exchange rate. Is it false or true? What do you mean the future spot exchange rate? Future spot exchange rate means what can be the spot rate in the future. So after all, it's the same forward rate only. So it can be the predictor. Why? Because foreign exchange rate gives you the idea where the future rate will go. So this is true. Okay. But I want false. Next, the forward exchange rate and the forward spot rate may not be the same. So forward exchange rate and forward spot rate. What is the difference between this? Forward exchange rate means the rate which I am giving right now. For example, suppose if I say $1 equals to $80 rupees, and in forward I am getting 1 month forward I am giving it as, let's say, 10 and 20. So what does it mean? $1 is right now 80 point, let's say make it 70, okay, or second one is 60. So $1 equals to 80.7060 and 1 month forward is given as 1020. Suppose if I ask you that forward exchange rate what will be the forward exchange rate after 1 month? So for buy rate, what will you do? Okay, let me get the answer from you guys now. Suppose if this is the dollar rate, $1 equals to 80.7060, 1 month equals to 1020. Now I'll ask you, what will be the buy rate after 1 month? Buy. After 1 month. Now give me the buy rate after 1 month, everyone. What will be the buy rate after 1 month? It is, say this, always remember 80.70 plus 10. Why? Because left side is buy and right side is always sell. And this is a premium currency because right side is bigger. So it will be 80.80. Right? So this is what? What is this 80.80? 80.80 is the forward exchange rate. And this forward exchange rate. And what is this future spot rate? So this is what, when actually after 1 month, means we actually go after 1 month in the next month, what will be the rate? If this rate is actually 80.80, then I was right last month when I had predicted, right? So the forward exchange rate and the future spot rate may not be the same. That is also true. Okay. Forward exchange rate is an unbiased predictor of the future exchange rate. Yeah, so the forward rate is an unbiased predictor of the future exchange rate. What can be the future rate? So this is also true, isn't it? The spot exchange rate is a good predictor of the future exchange rate. So spot is a good predictor of the future. So this is false. Okay. So the answer which we want is D. The spot exchange rate is a good predictor of the future exchange rate. That is false. Okay. Spot exchange rate cannot predict the future rate. Future rate is always predicted using the technical and the fundamental reasons. Okay. The objectives of central bank include, means why is there a central bank? Why is there a central bank? Central bank means RBI. Why do we have RBI? Yeah. Why do we have RBI? To ensure that a country's balance of payment remains in equilibrium. So to ensure that a country's balance of payment remains in equilibrium means RBI keeps this balance of payment in equilibrium. Does it do so? Tell me, everyone. Does it do so? Does RBI keep the balance of payment in equilibrium? No. RBI, it's like RBI is what? RBI just keeps the bank accounts of the country. So balance of payment is does not remain in equilibrium because of RBI. It remains in equilibrium because of the local factors. What people do sell, what people do buy from outside. So it includes to ensure that balance of payment remains in equilibrium, not the answer. To accumulate the country's foreign exchange reserves. Accumulate means what? Accumulate. So accumulate that country's foreign exchange reserves. So is RBI to accumulate these reserves? Is RBI to accumulate the reserves? No, it is not to accumulate. It keeps those many reserves which are useful in the next 9 months. So accumulate, this is wrong. Think over it. Everyone should think over it. To ensure implementation of current country's exchange rate policy. So implementation of country's exchange rate policy. Okay. So what does it do? Exchange rate policy is implemented by the RBI? No, it is not implemented by RBI. It is implemented by the commercial banks. Okay, so this is also wrong. RBI doesn't implement it. RBI makes the policies, and these are implemented by the separate banks, individual banks, to control the international trade. That is typically wrong, because the international trade cannot be controlled by anyone. It cannot be controlled. Okay, remember this. Why? Because after all, it's individual factor who is doing this import or export. So all are wrong. Now what do? We find the nearest one, or the most appropriate one. The most appropriate one over here is this. To ensure that a country's balance of payment remains in equilibrium. So RBI has some role over here, but remaining three, we don't have any role of RBI. So to ensure that the balance of payment remains in equilibrium, so that will be the right answer, because that is the nearest one. Okay. So that's here, what RBI will always see to it that the balance of payment is kept somewhere near, means it is somewhere in surplus. Okay, so that can be the nearest answer over here. The exporter should necessarily submit the export documents to the bank within 15 days from the date of shipment, 15 days from the date of, 15 days from the date of documents, 15 days from the date of shipment, 21 days from the date of documents, and 21 days from the date of shipment. So the exporter will submit to the bank the documents. Which documents are these? What are we talking of? What are we talking of? Which documents? Remember, the documents are invoice, insurance, then bill of exchange, bill of lading, packing list, and last one is packing list. Okay, last one is CO, certificate of origin. So these 6 documents, at least every exporter, whenever he or she does the export, these 6 documents should be there. So these 6 documents are submitted to the bank after doing the exports. They are submitted in 21 days. Remember this, they are submitted within 21 days. Okay, got it everyone? See, these 6 documents are very important. Out of these 6 documents, I'll tell you, insurance, this bill of bill of exchange, and bill of lading, these 3 are negotiable. These 3 are negotiable. Negotiable means they can be transferred. The right over these documents can be transferred just by signature on the back side. Remaining 3 are not negotiable. Invoice, packing list, and CO. These are not negotiable. Everyone subscribe to Officers Adda 24/7 YouTube channel. In this channel, you will be getting number 1, very important part. You will be getting the updates. Okay, number 1, updates from IIBF. IIBF gives various notifications. Remember, every now and then, some change in the timing, change in the date, change in something, some medium, somewhere the dates might be changed. So various updates are given. So those updates are immediately updated and explained on Officers Adda 24/7. Second part about this is you get free YT series, free YT. Right now you are watching free YouTube only. Okay. So this free YT series is applicable for and available for all the subjects. So that is very important. That's why subscribe to the channel right now. Click on the bell icon, share it with your friends, like this channel. Okay. The multinational company encounters the following exposures to foreign exchange risks. So, multinational company will encounter which type of exposure? Translation, economic, transaction, and all of the above. It will, yes. Multinational company will encounter all these 3. Because translation means what? Notional conversion of foreign currency to local currency. Notional it is. Economic exposure means what is the economic condition of that country. And transaction exposure means related to transaction, whether there is any mishap happening in that transaction. Okay, so answer is all of the above. The role of hedging agent is to. So what is the hedging agent? Hedging means the one who covers your risk, covering the risk. Hedge means covering the risk. Cover the risk. Covering the risk is known as the hedging. So the role of the hedging agent is to assist the firm in determining whether the foreign exchange transaction should be hedged. So whether this foreign exchange, any forex transaction which I am doing, suppose if I am doing a transaction of, let's say, $1 lakh, okay, against $1 lakh for next 3 months. So will I have to hedge it? Hedge it means will I have to cover it, cover the risk using some insurance product or some actuarial product? Okay. Then the role of this is, okay, determine this. So this is true. Assist the firm in determining the terms of the currency and interest rate swap. So that is also true. Assist the firm in determining the terms of the currency and interest rate swaps. So interest rate swaps means what? Exchanging one currency against the another. Always remember, in any swap, the one leg is always fixed, other leg is always floating. And then the answer is both A and B. So obviously the answer is both A and B, because this is also true. Okay, so answer is both A and B. Okay. Everyone join the Sankalpa batch started from September 4th. ABM, BFM, ABFM, BRBL, all the 4 subjects are covered. Numericals, objective questions, case studies, everything is covered. So join it ASAP. Okay, subjects are very tough, remember. You can join the Mahapag as well, CAIIB Mahapag. In Mahapag, you are getting multiple batches, plus Maha-marathons, mini-marathons, e-books, tests, okay? Then live classes. What all do you need? That much is enough. Huge discounts are going on. Let me show you how to get the discount. Go to Adda 24/7. I would always suggest you to go through the app. If you have to go to Adda 24/7, go through the app, okay? In the app, what happens? You get coin systems. In coin systems, you get 1% extra almost. Okay. So that's why go to Adda 24/7 over here. Okay. And then now go to JIB and CIB. See this. Click on CIB November 23. Now look at this. Sankalpa batch. This. Join this Sankalpa batch. Okay. So once you join, click on this, you'll get all the details. 300 hours online live classes, 81 test series, 65 ebooks. Click on this test series. Look at this. You'll again get the various test series. Click on each one. You'll get subject wise and topic wise test series. Similarly, the same is applicable for ebooks also. Click on these ebooks. Okay, any one of these ebooks. You'll see chapter wise ebooks. Very good to read. Okay. Similarly, online live classes, so many live classes are there, you'll get those. So that's why I would suggest join it immediately. Okay, join this immediately, the batch. Okay, you'll get various offers over here. Look at the fees, 5519, Guru 77 offer. So you can use SCP 77 also. 2 offers are applicable, SCP 77 also, Guru 77 also. So SCP 77 will be used later. Okay. Basically, you are getting 77% off. 23,999 is reduces to 5519. 77% off. So join it immediately. Similarly, you can join the Mahapacks also. In Mahapacks, you are getting the double validity for 6 and 12 months. So as I already told you, what you get in Mahapack, you get multiple batches, ebooks, tests, mini and Maha marathons. Okay. So enough for your 2-3 month studies. Okay, I'll be back tomorrow with another series. Till then, keep studying and do join the batches ASAP. Okay.